All right. Welcome to Mortgage 101, your guide to home ownership with Clinton Wilkins and myself, Todd Vino. And it's the month of love.
I can't believe it's February already. Can you?
Sure I can. Why do people always say, I can't believe it? Why can't you believe it is?
I don't know. I feel like just like time flies really fast. Sometimes.
Well, I mean, time is what it is. When you have as good a life as Clinton Wilkins has, time flies.
I mean, I think it probably does.
When you have a life like normal people have, time can tend to drag sometimes.
Well, and I mean, it's not my life is not always rainbows and unicorns all the time, but you know what? I have a pretty good life. I won't lie to you.
And that's great that you have a good life because you have an important role in our community and what you do, mortgages and your business. And you guys, what are you at now? You've surpassed $1 billion a while ago now.
We're almost at $1.3 billion.
$1.3 billion in total deals over the years. 5,100
transactions or so.
Yeah.
So I mean, that's a lot of transactions. And
yeah.
I always say like we've seen everything, but every day we see something new.
And in a city like obviously Halifax, where obviously mortgages have gone up. However, though, that $1.3 billion or whatever those transactions compared to what you would get to that same time in Toronto, where the numbers are going to be much bigger.
The time frame would definitely be different.
Yeah.
Our transactions here are much smaller. Right now, our average transaction somewhere around 330,000.
Yeah,
that's the average.
Yeah,
and the average home price here in Halifax is somewhere around $500,000. Plus or minus.
Right. So it's the month of love. So we're going to be talking about loving your home, and we can talk about some other dynamics, of course. We'll see what we can pull into this.
Obviously. I think everyone's talking about love right now, but like what happens when maybe love goes wrong?
Maybe
we'll talk about that a little bit later on.
How about the last segment?
Yeah.
We don't want to be a buzzkill.
We want to be very positive. And I think we're very positive in general. As you know, it's not maybe the best time for everyone. We're cognizant of that.
Yep.
But we made it through one of the toughest months of the year being January. So, every time a new month really comes around, I'm kind of re-energized.
Right.
When there's a new week that happens, a new Monday, it's almost like a fresh start. And, I think February for some people is a great time to have a fresh start as well.
Yeah, for sure. All right. Well, let's talk a little bit. Let's kind of get one of the negative parts of all of this is interest rates, and let's discuss that. So we are now at the 4.5. Is that where we're at?
The key overnight rate, the prime rate now is 6.7%.
Right.
And obviously that has an impact to consumers. It had an immediate impact when the Bank of Canada met. And that's something that we really need to be cognizant of. Not everyone is having a great time. People's cost of borrowing certainly has increased significantly over the last 9 months or since March of last year. So I guess now we're going on 10 or 11 months.
Yeah.
And it's starting to work. Even Tiff came out, the governor of the Bank of Canada, he came out and said, you know what? We are seeing results. Inflation is starting to slow. They still need more time.
Yeah.
He's cognizant of, obviously not everyone is being impacted the same.
Right.
We know this.
Yeah.
But the people that certainly have a variable rate mortgage, they've seen the impacts. If you have any debt tied to the key overnight rate, there has been impacts. Businesses have had impacts. Banks have had impacts. And it's starting to slow the economy, which is really what they are trying to do.
What about foreclosures? What have we heard about foreclosures?
I think we're starting to see some cracks in the banks. The CEOs of the Big Five certainly met, and they are starting to see some implications that there's starting to be some losses, still very, very low.
Yeah.
And the arrears are actually lower than where they were in like 2019. But they're expecting that the arrears are going to start becoming 1% and 2% as the year goes on.
Right.
I think with COVID, people had a bit of a Band-Aid. There were a lot of government programs. They were really able to, protect their finances. Mm-hmm. And now we've come through that period. People are back out spending. They're eating out. They're traveling.
Yeah.
And you know what? That's, I think, negatively impacting people's financial position. So, I think there certainly are going to be some losses. I think there's going to be more bankruptcies. I think there's going to be some foreclosures. But I think it's normal.
Yeah.
It's not that necessarily people are going to be so negatively impacted by where the rates are. Yes, it is an impact, but it's not the only impact.
Right. So when people give you a call and they feel as though that they're on the cusp of foreclosure or being in arrears or whatever it might be, what's the conversation like? Because sometimes maybe that things aren't as bad as they think they are. Sometimes.
I always say when people are feeling like they're going into a bad financial position, call us before you get there. When you're starting to feel and see the cracks. call us. Especially if you have equity in your home, there's lots of solutions. For some borrowers, we're choosing to increase the amortization. So some borrowers are taking, they might have 10, 15, 20 years left, and we're deciding to extend the amortization to 25 or 30 years.
Right.
I have some clients who are in a variable rate mortgage now that are choosing to break their mortgage early and go into another variable at a longer amortization. But don't get me wrong. We're doing more fixed rates today than we were even a couple of months ago.
Mm-hmm.
Some consumers need to take a fixed rate because they're qualifying on that lower rate.
Right.
And today, fixed is cheaper than variable.
Yeah.
Will it be in a year? Probably not.
Right.
But sometimes a year makes a big difference to people. So,
Well, and of course, and sorry to interrupt you, but one of the big selling features of the variable, and it may be worth it for somebody to pay a little more right now because, as you said, it could in the long run benefit them. But you can break that. Not that. So if anybody feels that there might be any reason why they may need to break that mortgage,
Take a variable rate.
Do the variable because explain for those who don't know.
When you break a fixed rate mortgage early, and we actually put out a blog just a couple days ago about why there are maybe some negative implications to a fixed rate, because obviously fixed rates, about 60% of Canadians traditionally take a fixed. If you break your mortgage early, if you're in a fixed rate, you're going to pay 3 months interest or an interest rate differential, which is ever higher.
Mm-hmm.
The banks are like the casinos.
Always
and
win.
they never lose.
Right.
So I think that's something that you really need to think about. There's a very high percentage of Canadians who break their term early. I would say right now, more Canadians are trying to stay out their terms, especially if you're in a very low fixed rate. You want to ride that to the end.
Mm-hmm.
I have customers that are up for renewal this year. I had talked to one today that has a renewal in July. They want to refinance, and they're weighing the pros and cons. Should we just ride out our low fixed rate until July, or do we want to do our refinance now? I think it depends. Everybody's situation is a little bit different. In this case, they had some unsecured debt. They want to clean up their situation, and maybe it's worth it.
Yeah.
Everybody's situation is a little
Right.
bit different. But with a variable rate, the really nice thing, if you need to break it, 3 months interest. So it has the lowest penalty.
Mm-hmm.
And the other reason people are taking the variable,
Yep.
they think the fixed are quite high, which they are.
Yep.
You can always convert your variable into a fixed with no penalty.
But you can't convert the fixed to a variable.
You can't go
Right.
the other way.
Yes.
You could always go variable to fixed, but you can't go fixed to variable. So I think that's something that you really need to
However,
think about.
something you could do is you could go a 1 year fixed.
Yeah, certainly people are taking some shorter terms.
Yes.
Not as many 1 and 2 years, Todd, as you would think.
Right.
Because they're still pretty high. The banks,
Is that right?
they know.
So
They
the
know.
banks always win.
Oh, the banks
So
always
what would
win.
a 1 year fixed be compared to a 5 year
Maybe like
fixed?
6%
6%.
for a 1 year fix.
Yeah.
That's kind of in that range.
And then what's a variable right now? About 6%?
About 6%, so
Yeah.
similar.
So you're not
Not
really
gaining
that's
or
not
losing.
gaining or losing,
No.
right? Straight. And the other component to that, I guess, is that if you did a 1 year fixed, then you're going to have to deal with that administration again, right? You're dealing
And
with the
we
same
don't know
thing.
where the rates are going to be
Who knows
in a
where they'll
year.
be. And you don't know where your situation will be in a year.
Exactly. And I
Yeah.
think that's really where we're seeing some clients transacting now. So another reason why we're seeing maybe some midterm transactions where people are like, you know what, now is the right time. Another variable is we don't know what's happening with property values.
Right.
Here's the elephant in the room. Are values down? I don't think they are, but there's certainly way less transactions happening.
Yep.
And, I've heard the stat that this January was one of the slowest Januaries of all time here in Halifax for real estate transactions.
Yeah.
So later in the show, we're actually going to be bringing on a realtor. I think in our next segment, I'm stealing a little bit of your thunder, Todd. We're going to bring on a realtor, and we really want to hear from him.
Hey, you're doing my job right now.
I am.
James Dwyer.
I'm teeing it up. We're going to bring him on to discuss, improving your home. Is that a good idea?
Yeah.
We all want to love our home, and maybe we want to love our home a little bit more. So we want to hear from him if improving your home is a good idea.
Yeah.
But I also am curious to hear from a realtor's perspective what's going on in the market.
All right. So as far as to use the word trepidation, I'm not sure that's a bit perhaps hyperbolic, but is there? I'm sensing that kind of feeling of trepidation out there, of panic, does not exist in this city. I think people have kind of exhaled. They've kind of we're getting our feet underneath us again.
I
Would you
think
say?
people were hitting the pause button
Yeah.
to do real estate transactions in some ways, Todd. I think that there were certainly a few months where we weren't seeing the transactions we normally would. And I would say it was even slowing into the back half of last year. But November, December, January were pretty slow, but we're seeing a lot more transactions happening now.
Yeah.
And believe it or not, us coming into February, I'm actually predicting this February may be busier than last February.
Really? Tell me
As
why.
strange as that is, I'm really projecting things to be 15, 20% slower. Some lenders are thinking it's going to be like 35% slower.
Right, yeah.
Just what's going on with rates and real estate, like really across the country.
Yeah.
Halifax, we are more resilient because, you know what, we've never really had the big boom. Yes, we've had double-digit growth. That's not sustainable, and I think things are going to balance out.
Later on the show, we're going to talk to James Dwyer. We're going to talk about a potentially matrimonial breakdown and relationships and what people need to know about going. So we got lots coming up.
And we want to talk about maybe refinancing and improving your property and lots more.
All right, that, and as Clinton says, lots more coming up in Mortgage 101, your guide to homeownership. We'll be right back.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.